I think there was a lot of uncertainty at the end of the year with what was going to happen with tariffs, with the new administration coming in. Obviously, a lot of these categories are exposed to higher prices if tariffs do get implemented. So I think there was a little bit of caution towards the end of the year, and you've seen that in the performance in some of these names.
Okay. With that said, every company has a different profile and investing related considerations. So you have a few names that you like that we'd like to walk through with our audience. I'm going to start with Wayfair, which I thought a lot about Wayfair during the pandemic. They were very busy as a go-to online play. For Wayfair as an investment, how do you think about it right now?
Yeah, I think right now it looks pretty undervalued. We have it at about a 30% discount to our $70 fair value estimate. And a lot of that is contingent on growth outside of that core, average home buyer that is furnishing their house. So if you think about other opportunities that they've pursued, like either a B2B business, which is scalable and replicable, it was roughly $2 billion in revenues last year. That is something that has sort of widened the aperture of their total addressable market. And then, they're really trying to figure out how to monetize the advertising part of this business. And I think that's an opportunity for growth for them too. So we don't have particularly aggressive growth assumptions in our model. We have growth on the top line going back to roughly 4%, growth. And that's significantly slower than pre-pandemic and obviously what happened during the pandemic. But I think we've seen the worst of the slowdown. We've had sort of single-digit declines the last few years, and now I think we have an opportunity to really return to growth again as the housing market and some of these other opportunities stabilize and start to pay dividends for them.
Okay, so that is the story on Wayfair. Let's move from an e-commerce play to a toy play, and it is Hasbro. And I had the opportunity actually to speak to their CEO not that long ago. But one of the parallels actually is that there's a lot of digital focus for Hasbro these days, just as Wayfair has a lot of digital focus. But give us your sense on the Hasbro investment thesis.
Yeah, that's right. I think first we'll look at what our fair value is $83. So again, another 30% roughly discount. And I think when we look at these shares back over the last year or so, the first half of last year was really great for Hasbro. Shares ran up pretty significantly and then rolled over pretty significantly in the back half of the year. So I think we are looking at a revaluation that looks attractive here. And I think last week we had Target come out and say toy sales had accelerated into the fourth quarter. I don't think demand has gone away, and I do think that this business has really pruned underperforming assets in its portfolio. That gives sort of the entire portfolio profitability and entire lift. And yes, the digital piece is important. If you look at monetizing something like D&D Beyond, which is an acquisition they made for the Dungeons and Dragons franchise a few years back, right? They're figuring out how to have more of an omni-channel presence in certain areas like that.
Okay, and then another consumer discretionary name that you wanted to flag today is Polaris, which we know a little bit about that business up here in Canada because there's another player that's very big in off-road vehicles. But PII is another name that you think doesn't get the respect it deserves in the market.
Yes, so I think most of the names that I cover that are in this space, including BRP, are fairly undervalued right now. There's been a pretty rough stretch since the beginning of the pandemic from 2021 forward, where interest in the products ran up very significantly. The channel at the dealer level got very lean. Then as the backfill happened, a demand normalization slowed down. And so I think we're finally at a point where inventory at the dealers is really getting to a right size level. And so while we might not have top line growth for a lot of the names in this space, if you think about Polaris, Brunswick, Malibu, right, these boat and ATV OEMs, I think we've maybe stopped the decline and could theoretically see flat sales in 2025 again before we start to see growth for these businesses again. But with the cost profile right-sized, I think we could see some restoration to profitability, and the fact that things aren't getting worse, but maybe getting better is something that could help these companies over the next year or so.